Welcome back again, my dear professional students. Now, we will prepare the statement of financial position as at March 31st, 2015 for Benga PLC. So we are preparing the statement of financial position as at March 31st, 2015. Okay, so we'll have assets and non-current assets. Okay, so and the items of assets we have in this question are basically four, which we have worked out already, except for the freehold property, I guess. Yeah, freehold property, there was a revaluation surplus there also. So there is freehold property, there's freehold property, there is leasehold property, there is plant and machinery, there is furniture and fittings, and there is motor vehicle. Okay, those are all the non-current assets. So the first one, which is freehold property, that was the first one I will note. And if you look at our workings one, the freehold property, we're told that there was a revaluation surplus on that freehold property that has not been accounted for. So that 375,000, we will have to add 20,000. That will bring it up to 395,000. Okay, that's for that freehold property. Now, after the freehold property, the next item is leasehold, then plants, then furniture, then motor vehicles. All of that, we will get them from the workings. I almost forgot. There is this for 7,500. That was a capitalization of legal fee to freehold property. So that means we need to add 7,500. Oh, good. 395,000 plus 7,500. That's 402,500 so far. Okay. So let's pick on. Okay. Then the leasehold land. We have the carrying amount here as 87,750. So I will add 87,750. That brings it to 490,250. 490,250. Then the plant and equipment, which is now 104,250. 104,250. Then the furniture and fittings. Furniture and fittings, which is 43,875. That gives me 638,375. Then finally is the motor vehicle, which is 60,000. And that brings the total to 698,375. And those are the items of property, plant and equipment. So we have picked all items of PP and we got it as 698,375. Then we will have intangible assets. Tangible assets. So what are the intangible assets we have in this question? What are the intangible assets we have in this question? So let's look at it carefully. intangible assets. Okay, I can see one. There is a patent and trademarks is an intangible asset, and here it is 323,250, 323,250. And let's see if we have any other one apart from patents and trademarks. No other ones. Can't see any other one here. Okay. Or do you see anyone? So let me go and have my intangible assets as 323,250. 323,250. Okay. So these are the items of non-current assets. So other items that could come in there are items like goodwill or investment in equity instruments and other financial assets, or even investment property. From here, we don't have any of those items in the trial balance. I can't see any of them in the trial balance. Can't see any of them. Can't see goodwill. I can't see investments. Can't see investment property. So we have picked the items we have. Now let's start picking items of current assets, and the very first will be our closing inventory. So I don't have to add it again because I've already added it before. So my closing inventory that I have here is this. My closing inventory was 638,625. That's my closing inventory. And that will be items of current assets. So I'll have inventory. And it's 638,625. Hold on, let me add this together. 698,375 plus 323,250. That gives me 1,021,625. Okay. Back to the question. And the next one there should be, I should look for trade receivables. Trade receivables. So this is it. And it is 266,445. However, there was an allowance for receivables. Allowance for receivables here. This is the allowance for receivables of 800, and so I will deduct it, which is 8,625. 8,625. If I deduct that from 266,445, that gives me a trade receivables amount of 257,820. 257,820. That's my trade receivables. So my trade receivables is 257,820. Okay. Having picked the trade receivables, let's go and pick other items that we can find. After the trade receivables, definitely cash will come in, which is 7,680. But before cash, let's see if there were other items before cash that would surface in there. I can't see anything here. Let me see my workings. Current assets. Okay, I think let's go and pick the cash, which is 7,680. So the cash is 7,680. Cash is 7,680. It's 7,680. So for now, I will have my total assets, which should be the addition of the non-current asset and the current assets. And the non-current asset is this amount, 1,021,625, 1,021,625. I will add the inventory, which is 638,625. Then I'll add trade receivables, which is 257,820. Then I'll add the cash, which is 7,680. Then it gives me a total assets of 1,925,750. Then I'll have equity and liabilities. And what's the first item of equity? The first to be the ordinary share capital. And what is my ordinary share capital? These cumulative preference shares, we didn't put it as part of finance cost. So 8.4 divided by 100 multiplied by 150,000, should have worked it, is 12,600. So this 27,600. That should have been that finance cost. 27,600. $27,600. Okay, so 207,375 minus 27,600. That'll be That'll be 179,775 minus 68,900. That'll be 110,875. If I add 20,000, that would be 130. It's 5. Okay. So what was I talking about? We were going to pick our ordinary share capital. And what's my ordinary share capital? Okay. My authorized and issued, which is 450, and the preference shares is 150. Okay. So issued and authorized share capital 450,000. 450,000. $450,000. Then there is preference share capital, which is 150,000. Okay. So what's the next item after that? After ordinary shares, then we want to look for share premium. So the share premium was 150,000, right? And there was a general reserve, which is 85,000. So 150 and 85. 150 and 85. 150 and 85. So share premium 150 also, and there is a general reserve, which is 85,000. Then let's see if we have any other reserves. If we don't, then we will go and pick the profit for the year, but there should be retained earnings, like a retained earnings. Let's see. Yes, there is. There is a retained earnings, which is 425,250. 425,250. Okay, we will have deducted dividend, but the dividend here is a proposed dividend, which we are not going to recognize. Okay, so now my retained earnings was 425,250. In there, I will add my profit for the year, 425,250, and my profit for the year, which should be my total comprehensive income, will be plus 130,875. So that gives me 556,125. 556,000 as my retained earnings. 556,125. And we must not forget the revaluation surplus, which is the 85, 65, and the 20. Let me go and show you where I got them from. Where is the 65? This is the 65. Okay, revaluation surplus, and the 20, which is an addition, it will increase the revaluation surplus, and that's that 85. Okay, so do we have any other reserves apart from those ones that we have picked so far? From here, I don't see any other reserve. I don't know if you see any. I don't see any. So let me go and add those ones up. So I need to add them up. So that will be 450,000 plus 150,000 plus 150,000 plus 85,000 plus 556,125 plus 85,000. Okay, what does that give me? That gives me 1,476,125. Okay, then the liabilities. What should come first should be the non-current liabilities. And in there is a 10% loan note, which I observed already. I'll go and show you, of 150,000. So there is a 10% loan note of 150,000. This is it. 10% loan note of 150,000. Okay. So is there any other non-current liabilities like bonds, debentures, long-term, any long-term liabilities? I don't see any here. I don't see any. And I'm not sure we spotted any. No, we did not. Okay. So let me go on. That's that. So the next will be my current liabilities. Current liabilities. Current liabilities. And the first on the list should be my trade payables. Trade payables. So where's my trade payables? Let's go and pick it. My trade payables, this is it. And it was, okay, 146,250. 146,250. So let me go and have it there. Trade payables. 146,250. 146,250. Trade payables is 146,250. And let me quickly pick also my bank overdrafts. Let me go and pick my bank overdrafts. Where is my bank overdraft? Okay, this is it. So I have bank overdraft, and the bank overdraft is 76,875. 76,875. Bank overdrafts. Bank overdrafts. Bank overdrafts was 76,875. Okay. So let's go to our question again to see if there are any other non-current liabilities. So do we have any other item of non-current liabilities apart from bank overdraft and trade payables? So let's look at it carefully. Okay, I can't see anyone here. Alright, so let's go to the workings. Okay. The one I see here is the accrued interest. Okay. And the accrued preference dividend. Let's take the accrued interest first of 15,000. So let's go and have accrued interest. Accrued interest on loan, 15,000. So accrued interest on loan which is 15,000. Then we'll have accrued preference dividend. Accrued preference dividend, which is this 12,600. Which is that 12,600? Okay. So do we have any other liabilities? That will be current taxation. So where is my current taxation? Current taxation is 68,900. Current tax 68,900. Current tax current tax 68,900. Okay. Is there any other one? Let me check. Can't see anyone yet. Can't see anyone yet. Let's go and add up and see if it balances up. If it doesn't balance up, then we have to check. Maybe we have omitted something somewhere. But in the exam, if it doesn't balance up, please move forward. You don't have time to start looking for figures. Here, this is a class. So we have all of the time to check and see that we are accurate. So, starting from my equity is 1,476,125. My non-current liabilities was 150,000. Hope you are using your calculator. My trade payables was 146,250. 146,250. My bank overdrafts is 76,875. My accrued interest on loan was 15,000. My accrued preference dividend is 12,600. My current tax is 68,900. So I have 1,945,750. 1,945,750 as total equity and liabilities. So let's check if this is equal to my total assets. There is a difference of 20,000. This is 1,925 and this is 1,945 minus 1,925,750. 20,000. So which 20,000 is that? That means you have omitted a 20,000. Maybe we have overstated this. There is this 20,000. I think evaluation surplus. Evaluation surplus. Evaluation surplus. Where is it? Yeah. I think it's this evaluation surplus because that was the only 20,000 that we had. This one. Okay, so I think this is where the error would be. This evaluations, this 20,000 here. What happened was, you know that this 20,000 revaluation surplus, we added to revaluation surplus, and it has been treated in the statement of profit or loss. However, it's added here too. It should not be added inside this place. There's 20,000, but it is inside. So when we're adding this profit for the year to, when we're adding the retained earnings to the profit for the year, we added 138.75. Okay, so that will result in we are picking this like twice in the statement of financial position. So we should have picked this because this will be treated as a separate line item as part of each revaluation surplus. So we should not pick this. This is what we have to pick. Otherwise, our accounts will not be balanced. So 110,875 is what we should pick. So let's just reduce that retained earnings by 20,000. So this should be 536. Should be 536. Okay. So let me just add it again. So that 1456, if you add it to 150,000 plus 146,250 plus 76,875 plus 15,000 plus 12,600 plus 68,900 gives me 192,550. 192,550. Okay, so with this, my account is balanced. Alright, so what you have to do is solve this question yourself. Make sure you can also solve it yourself, and that'll be it. See you in the next question.